efficiency.
Well, now let's find out, first of all, what these words voluntary and compliance stand for. You have your piece of paper. Would you, Dave, would you read down there at the bottom the term, say, voluntary, and this is taken from a dictionary. Go ahead.
Definition of voluntary: acting or done without any present legal obligation to do the thing done. Webster's Third World International Dictionary.
Everybody understand what voluntary is? Then maybe there's a special hook with the word compliance. So let's go to Bill. Let's read the word compliance, the definition of compliance.
The disposition or willingness to please, yielding, or acting in accord.
Okay, so let's put them together. We are paying our taxes voluntarily, without any legal obligation, right? And the reason we're paying our taxes is because we want to please. That's voluntary compliance. You see, what I've just described to you is tithing, as presented to us in the Old Testament, where the churches ask for a voluntary amount of money. The compliance is 10%. And we voluntarily give that money to the church, and they do with it what they want to. You see the term voluntary compliance, and that's what we're talking about. Now, it would be easy enough for the IRS to say mandatory compliance. Isn't that just as easy as saying voluntary compliance? If they meant mandatory compliance, it would be easy enough to say that. And in fact, when I ride in airplanes across the United States, we hear that it's mandatory that there's no smoking in the lavatories. And that's mandatory compliance. Those are the terms they use. So you need to understand here that nobody denies that the Internal Revenue Service is a voluntary compliance system. It's just that we have not been taught that. We have been taught that if we don't pay our taxes, we go to jail, or somebody is going to come down and trample all over us. What I'm going to do now is I'm going to present to you some documents. These are copies of certified documents, and would you testify to us, Dave, that this document was in the is the document from the state of Delaware?
Yes, it is.
And this document in the state of Delaware was executed in 1933.
That's correct.
All right. And Bill, if you turn the page over, would you tell us the name of the corporation that was established in 1933 in the state of Delaware?
Yes, Al, it's the Internal Revenue Tax and Audit Service Incorporated.
Ah. Well, that was a surprise, isn't it?
Very much so.
You see, I've always thought that the Internal Revenue Service was part of the federal government. If it's part of the federal government, what in the world are they doing going to the state of Delaware and becoming incorporated in 1933? Well, this took a little bit of investigation, but I found that in 1936, this very same entity became unincorporated. Now, what do we mean by unincorporated? Actually, if you are incorporated in a particular state, you have the right to function in that state by statute law. And if that state decides to audit your books, they have the right to audit your books. What if you did not want to be audited by the state of California? What would you do? How about become unincorporated? That's just exactly what happened in 1936. This very same corporation became unincorporated, and the state of Delaware no longer had the authority to audit their books. Well, let's continue to research to find out who is the IRS. So, Dave, I'm going to submit to you an envelope, and Bill, here's an envelope. And what I'd like you to do is tell us that envelope. Whose envelope is that? Or where did it come from? This is a bill envelope. It's a window envelope, a number 10 envelope, I believe, a window envelope. And can you tell us where that's from? Dave, can you find where it's from?
From the Internal Revenue Service.
It says it's from the IRS, Internal Revenue Service?
Right. IRS.
Okay, here it is.
Center, Philadelphia, Pennsylvania.
Right there?
Sounds good to me.
Okay, so it's from the IRS. All right. Basically, this is a bill or an envelope that you receive in a letter from the IRS if you owe them some money. And basically, what the envelope says is, if you owe money, write a check out to the IRS and put it in the envelope and send it to us. However, if you have already done this and it hasn't been accredited to your account, please take your canceled check and turn it over. And on the other side of the canceled check will be an endorsement stamp. Now, what I would like you to do then is read the endorsement stamp to make sure it was deposited into the right account. Now, if I was going to write you a check and it was deposited into his account, I could assume that there is some type of agency going on between the two of you. Isn't that right?
Or one of us a crook.
Or one of you are a crook. Okay. Either way, I think that will suffice. So what we're going to do is we're going to read on the back of this envelope the endorsement stamp that's supposed to be on the back of every check submitted to the Internal Revenue Service. Bill, we have here the endorsement stamp. Right here. Would you read the very first line of that endorsement stamp?
Pay any Federal Reserve Bank branch or general depository for credit U.S. Treasury.
Okay. Pay any who?
Federal Reserve Bank.
Pay any Federal Reserve Bank. Well, now, who is the Federal Reserve Bank?
Corporation.
It's a what?
Corporation.
A corporation? Is it part of the federal government?
No.
No. In fact, the Federal Reserve Bank is not part of the federal government. The Federal Reserve Bank was organized in 1913. It was organized outside the federal government. It is a private entity owned by a dozen extremely wealthy families. A dozen extremely wealthy families that have intermarried and have become one huge family. But the Federal Reserve Bank is owned lock, stock, and barrel by private enterprises, and their position today is that of the complete and total control of the monetary system in the United States. Now, just a minute. Federal Reserve Bank. If I was to write a check out to the IRS, and it was deposited into the Federal Reserve Bank then, who is the IRS working for?
They're an agent of the Federal Reserve System.
Ah, so now let's see if I can create this on the board. First of all, we have a borrower, or excuse me, we have a bank. All banks are in the business for loaning money. And since I was a banker's son, one of the things that my father told me is basically a bank is in the business for loaning money. If you don't have a borrower, the bank can't do business. Is this understood? All right. So now we have a borrower. In this particular case, let's suppose that we have the borrower is a teenage son. In fact, let's suppose that this teenage son is spoiled. And the spoiled teenage son goes into the banker and says, banker, I would like to borrow some money. And the banker says, sure, we'll be more than happy to loan you some money. Do you have any assets? The son says, no, I don't have any assets. Then the banker says, do you have a job? And the son says, yes, I have a job. It's a summer job because I'm going to college. I'm going to become very, very smart. And someday I will be a very good person in this community and I'll be able to pay you back. With that, the banker says, no, I'm sorry, I can't loan you any money. The son is not going to give up there. He simply says, well, I have a father. The banker says, bring your father in. So the son goes out and brings the father in. We sit down now. And this time the son turns to the father and says, Dad, I'd like to borrow this money. You know I'm very, very smart, and I'm going to be a good person, and I'm going to study, and besides that, I need a car that can get me to and from college much faster so I have more time to study. You know how teenage sons are. The father likes this idea, and besides that, he loves his son, and so he says, all right, son, I will co-sign for you. Now we have another entity that comes into the picture. He's a co-signer.